What happens when you genuinely cannot pay the IRS? There is a status built for exactly that. It is called currently not collectible, and it pauses IRS collection. When the IRS agrees you cannot pay your tax debt and still cover basic living expenses, it stops the levies and the wage garnishments. The IRS verifies this from a financial statement, usually Form 433-F. You list your income, your allowable living expenses, and your assets. If little or nothing is left after necessary expenses, you may qualify. But here is what currently not collectible does not do. It does not stop interest, and it does not stop penalties. Under Internal Revenue Code Section 6601, interest keeps building on the balance. So the debt can actually grow while it sits in this status. The reason it is still worth it is the collection clock. The IRS generally has 10 years to collect, and that clock keeps running the whole time. If your finances never recover, the balance can expire before the IRS can collect it. Currently not collectible is not forgiveness. It is breathing room. Whether it is the right move depends on your numbers and on how much time is left on that clock. Tax Expert Today